Empress royalty is a rare find in the markets. The reason why I think it is such a rare find is that the company is trading at only $40 million market cap, but is estimated to generate 14 million in revenue for 2025. Usually for a $40 million company, you don't get any cash flow at all. And if a company can get some revenue coming in the door, they are probably doing something right. They're executing well on their business model of primarily lending investment capital into current and near-term precious metal mining companies in exchange for a royalty or stream on the gold or silver produced from the mine. The company specializes in the niche area of smaller scale mining operations where there is not a lot of competition in this particular space of the market. The company is now producing strong and growing cash flow from their strategic investments in operating precious metal mines. Let's take a look at some of the slides from the company's website to get a better feel for Empress and what they're doing. Let's go over what a royalty and stream are. First, though, a royalty agreement is where a company provides upfront capital to a mining company in exchange for a percentage of future revenue from the mine. In a streaming agreement, a company again provides upfront capital to a mining company in exchange for the right to purchase a portion of the mine's future metal production at a predetermined discounted price. Both types of these agreements give investors exposure to precious metals upside with protection against rising costs in mining. Also, the royalty holder gains additional upside from increased production and increased life of mine from exploration after the initial investment with no additional capital being lent from the royalty holder. These are probably some of the reasons why royalty companies, the gold line on the top, have consistently given investors superior returns compared to the gold miners, the gray line at the bottom, and gold, the blue line in the middle. And this is over a time frame going back to 2009. Empress really is thriving in this royalty and streaming business. They are looking strong at the current moment. The company is 100% focused on gold and silver, giving investors pure exposure to precious metals. Their four key producing assets are globally diversified, de-risking the company. They will easily exceed their 2024 revenue guidance of $6 million. The stock is currently trading at a very discounted price to the net asset value, offering a value proposition to investors right now. Here's the revenue chart that I certainly like to see. Strong increasing year over year revenue growth. Projected revenue growth for 2025 is around $14 million and increases sharply again in 2026. So revenues are looking good on all fronts. Let's take a look at two different valuation metrics. Empress is really undervalued compared to other streaming and royalty stocks. On the left is price to net asset value. Right now, Empress is trading at 0.52, whereas the industry average is twice as high, giving Empress a 51 discount to their peer group. On the right is price to cash flow for 2025 estimates. Empress is trading at about 10 times cash flow. This is compared to an industry average of 25, so an even steeper 60% discount to peers on that metric. Here is where most of the revenue is coming from for producing assets located around the world. We'll take a look at each of these. We will look at the Tiahuato deal first. This is an underground gold mine in Mexico with a silver credit. Empress has a stream on the silver, which gives about 6.2 million in annual cash flow. Manica, a gold mine in Mozambique, provides an annual cash flow of 1.3 million. There's also exploration on the property to identify additional resources in the area, potentially extending the life of the mine, adding to the future revenue of Empress with no additional investment. Antapite is located in Peru and is an underground gold mine. This stream provides Empress with 4 million in annual revenue. Galaxy is a gold mine in South Africa. The stream will provide $2 million in annual cash flow. Empress also has a strategic partnership with Endeavor Financial as its investment manager and significant shareholder. The Endeavor team of seasoned professionals, such as investment bankers, geologists, mining engineers, help Empress source, advise, and vet investment opportunities in the precious metals space. So taking a look at the share registry, management and the board owns 25% of shares, aligning themselves with shareholder interests. Also, there are some big names invested in the company, such as Rick Rule, Sprott Asset Management, among others. Empress also has a $20 million debt facility available to them to create new royalty and streams, which is non-dilutive to shareholders. They're currently talking to several mining companies interested in making a royalty or stream agreement. So good non-dilutive growth in the portfolio and future cash flow could act as a catalyst for the stock. Here's a 2-year chart of Empress. The share price has held up much better than most of the companies in the mining sector, pretty flat over the last 2 years, but the share price has dipped in recent months, and the market cap is currently 38 million, which is really low for a company that could generate 14 million in revenue this year. So some key takeaways for Empress are historic outperformance from gold and royalty companies compared to miners and gold, proven execution of royalty and stream agreements resulting in strong cash flow, and the company is very undervalued compared to its peers. Empress has access to debt to allow for non-dilutive deals to increase revenues. They have a strategic partnership with Endeavor, giving access to financial and technical experts to source and vet deals. Empress Royalty is on my watch list. Please do your own research on the company. This is not financial advice. Thanks for watching, and we'll see you in the next video.